In the grand game of investing, every move counts. Every number has a story, and every story has the potential for a happy ending. Are you betting on the right stocks? Forget the slot machines. It's time to invest where the real jackpots are. Hey there, savvy investors and stock market enthusiasts. Welcome back to Fun Financial Insights, the channel where we dive into the world of finance with a twist of fun. If you're new here, hit the subscribe button and join our community of smart investors who like to mix a little laughter with their ledger. Today, we've got a sizzling topic that's hotter than a summer stock rally. 7 growth stocks to turn 10K into 80K by 2028. So grab your calculators and let's get financially lit. Growth stocks are like the Silicon Valley startups of the investment world. They're companies that reinvest all their earnings back into the business, fueling rapid expansion, innovation, and you guessed it, growth. But why should you care? Well, let me tell you a story. Once upon a time, there was a little company called Amazon. It started as a small online bookstore and grew into an e-commerce titan we know today. If you had invested just $1,000 in stock's IPO back in 1997, you'd be sitting on a gold mine worth over $1 million today. That, my friends, is the power of growth investing. And it's not just a one-hit wonder. History is littered with stories of growth stocks that have skyrocketed, turning ordinary investors into millionaires. Take Netflix, for example, or Tesla. These companies have redefined their industry and rewarded their shareholders handsomely. But hold your horses. Investing in growth stocks isn't a guaranteed jackpot. It comes with its own set of risks. These companies often trade at high valuations relative to their earnings, and they can be more volatile than your average blue chip stock. So how do you navigate this high-octane world? It's all about research, timing, and a sprinkle of guts. You've got to understand the business, believe in its potential, and be ready to hold on tight through ups and downs. And that's what we're here for. We've done the homework, crunched the numbers, and we're ready to share our top picks that could supercharge your investment journey. Now, first things first, let's talk criteria. What makes a growth stock stand out? Is it the charismatic CEO, the innovative product, or maybe it's the company's ability to scale at the speed of light? Well, it's a bit of all of that and more. You see, research is king. You can't just throw darts at a board and hope for the best. You've got to dive deep into financial statements, understand market trends, and really get to know the company inside and out. And patience, my friend, is your ally. Rome wasn't built in a day, and neither is a robust stock portfolio. It takes time for these companies to mature and for their stock prices to reflect their true value. And of course, with high potential comes high risk. These stocks can be volatile, and not every pick is going to be a home run. And that's why it's crucial to balance your excitement with a healthy dose of skepticism. So as we sift through the market's noise, we focus on the fundamentals: strong leadership, solid financials, and a product or service that's not just good, it's revolutionary. So without further ado, let's meet our contenders. We will delve into each company and explore its history, market share, past performance data, and the factors that make it a compelling growth stock. First up, we're going to talk about DraftKings. Founded in 2012, DraftKings started as a daily fantasy sports platform and became quickly a leader in the industry. It capitalized on the growing trends of fantasy sports and expanded its offering to include sports betting following the repeal of PASPA in 2018, which allowed states to legalize sports betting. This company isn't just playing games, it's setting the stage for a financial revolution in the sports betting world. Let's crunch some numbers and paint a picture of what an investment in DKNG could mean for you. In the first quarter of 2023, they reported a whopping revenue of $1.2 million, a 44% increase from the previous year. Now, what does that mean for you, the investor? Well, let's say you jumped into DraftKings Arena with a $10,000 stake. Considering their historical performance and future projections, you could be looking at a significant return. If DraftKings continues on this trajectory, reaching their 2024 revenue goals, that initial investment could grow exponentially. Now let's shift gears and explore the story of Li Auto, a company that's driving into a future with full throttle. Li Auto, founded in 2015, charged onto the scene with a mission to revolutionize the auto industry. In just a few years, they've accelerated their startup to star player in China's booming electric vehicle market. But what's the fuel behind Li Auto engines? Market share. This company has been cruising past milestones, capturing a significant share of the EV market. They're not just competing, they're leading the pack in one of the world's largest automotive arenas. Li Auto's stock has been on a journey as dynamic as its cars, with a historical high of $46.65 in August 2023 and a resilience average price around $34.22 over the last year. Li's stock is as electrifying as its vehicles. But here's what supercharges Li Auto into our growth stock list. With a fourth quarter earnings beat that sent shares soaring nearly 19% and a revenue growth that's revving up well over 100%, Li Auto is not just on the fast track, it's setting the pace. In March 2024, Li Auto shifted into high gear, unveiling the Li Mega, their latest electric marvel. This isn't just another EV, it's a game changer poised to turbocharge delivery growth in the quarters to come. After a record-breaking year with 376,000 vehicles delivered, Li Auto is not tapped the brakes. They set a bold target of 800,000 cars for 2024, and with the Li Mega leading the charge, their goal isn't just ambitious, it's within reach. But Li Auto's roadmap extends beyond domestic dominance. With robust financial resources at their disposal, they're eyeing the global market. International expansion? It's on the horizon, and it's a catalyst that could shift growth into overdrive. If you're enjoying this video, please take a moment and hit the like button and subscribe to our channel for more fun financial insights. And next is another company also in the transportation sector. And this time we're taken to the skies with Ehang Holdings, the company that's propelling us into the future of transportation. Fasten your seatbelts as we soar through the story of Ehang, a company that's not just flying, it's redefining flight. Ehang burst onto the scene in 2014 with a vision to make air mobility a reality for everyone. Since then, they've been ascending rapidly, capturing imaginations and a significant market share in the autonomous aerial vehicles, or AAV industry. Now let's dive into the numbers. From a historical high of over $124 per share in 2021 to a more grounded average price of around $14.70, EH's stock has seen its share of turbulence. Yet it's the company's resilience and innovation that keep investors boarding the Ehang flight. And here's where it gets exciting. Ehang's latest venture into the next-generation battery market is set to electrify their growth. With strategic investments in solid-state lithium batteries, Ehang is not just flying, they're leading the charge in a new era of energy efficiency and safety. But the skies are just the beginning. Ehang has unveiled the EH216S, a pilotless passenger-carrying aircraft priced at $410,000. This marvel of engineering is not just for show, it's for the global market, ready to take on the world. What this means for you as an investor is that Ehang isn't just selling flying cars, they're selling a future where your $10,000 investment today could see a significant uplift as Ehang's aircrafts take to the skies and their market shares climb. And at number 4, Lithium Americas has been a key player in the lithium sector, essentially for the emerging electric vehicle battery market. Financially, LAC reported an operating income of negative $27.63 million and a net income of negative $9.3 million for the fiscal year. Now, despite these losses, the company's strategic positioning in the lithium market could see a significant turnaround, especially with the EV market expected to grow exponentially. Number 5, Riot Platforms, a leader in Bitcoin mining, has shown resilience in the volatile cryptocurrency market. Riot reported record results for the fiscal year 2023 with total revenue of $280.7 million and a net production of 6,626 Bitcoins. The company's strategic expansion and efficient mining operation positions it well for future growth. Number 6, let's talk about Miniso. a retail gem that's shining bright in the global market. With a forward PE ratio of just 16.7 and a tempting dividend yield of 1.99%, Miniso is turning heads as a potentially undervalued growth stock. Miniso isn't just about affordability, it's about striking the perfect balance between quality and price. Their dynamic product rollouts keep the brand fresh and in demand. And the expansion? It's nothing short of aggressive. With a global footprint of 6,413 stores and counting, Miniso's growth is as robust as their business model. Financially, we're seeing revenue surges at 54% to $541 million in Q2 of 2024. It's clear Miniso's strategic moves are paying off. And then last but certainly not least, Cur Leaf. Cur Leaf operates in the expanding cannabis industry. With more regions legalizing cannabis, Cur Leaf's growth is supported by an increasing number of dispensaries and product offerings. Cur Leaf is sprouting up in the cannabis market with robust financials with a vision of green growth. With a 6% revenue bump to $1.35 billion, they're not just growing, they're thriving. 2024 is tagged as a catalyst year, and with the international revenue blossoming by 120%, Cur Leaf's planting seeds worldwide. Their R&D is blooming too, with 122 new products launched, signaling a growth spurt on the horizon. So if you're thinking of investing $10,000 in Cur Leaf, might just be the soil to nurture that seed into a bona fide $80,000 by 2028. But let's keep it real. The market's a roller coaster, and we're all strapped in for the ride. So do your homework, folks. Research these like a boss. Invest wisely, and who knows, that 10K might just balloon into a whopping 80K by 2028. And if you have a moment, drop a comment below and let me know which stock you are most excited for in 2024. Until next time, keep those investments sizzling and stay financially fabulous.